This topic is one that I think the rest of the day we've been talking about this combination of startups and established firms and how they all interact. But here we're really focusing on the big incumbent, big established financial enterprises, and asking what does this fintech revolution mean for them? Besides the fact they might be blown out of the water by some startup, but in terms of how they look internally about what they're doing. And I suppose, I first moved to New York in 1997 to cover Wall Street for The Economist. And I remember the issue very quickly then. One of the big issues was technology and how it was disrupting the business, and the internet was coming on stream. There was straight through processing. There was sort of fancy trading systems like Optimark and other things going on. So I suppose what I want to start with our four panelists is to really explore what is it about this moment in time and technology today and what's going on that is actually different to that really 20-year plus process of technological change that's been going on in the finance industry. And then we'll dive down into a bit more detail. Either, I'm going to start with you. What is it about today that's different in terms of the technological opportunities, threats, et cetera, for you as a large company in the finance space?
Yeah, so I'll take it from the threats angle first. I think that when we at Bank of America think about technology, we first think about it from the lens of our clients and our role in helping them kind of run their businesses. So when I think about it, we're a financial institution, so we are there to enable commerce. And whether that's providing them with capital or access to capital, or it's facilitating transactions globally, which is what my business does for the bank, or it's helping them mitigate risk. And so when we look at technology, it's through that lens. And when I see what our clients are asking us for, they're saying, look, the treasurer, who's my main client, or the CFO, is thinking about a couple of things. They've got, across non-financial corporates in the US, there's about $2 trillion of cash on their balance sheets. And they're looking about actively with the board and the C-suite of how they deploy that capital, whether it's stock buybacks, it's investing in infrastructure projects, or other uses. And that requires them to both be able to manage and harvest it globally and think about how they deploy it. And so technology sort of enables them to do that. So, given how banks have grown up and been merged and rolled together over time, it becomes really challenging to have all these legacy systems sort of run the world. And so the interesting part about technology today, between the cloud and mobile, we're able to really rethink infrastructure and actually move things forward at a much faster rate. So instead of having to spend 7 years replatforming a region to replumb things the way they worked before, you can deploy things in the cloud, have it work locally for a client, and they can adopt it much more easily. Because there's always a two-sided problem. It's not just the bank spending millions of dollars to integrate a system, it's then making that available to your clients so they can integrate into their environments. And for our clients who are treasurers, there's not huge IT budgets and not huge staffs. So their ability to adopt technology, if you can deploy it in a mobile way or using APIs or some other mechanism, is much, much better.
So Alice, I'll go to you with the same question. What's unique about this moment in time?
Yeah, and I think I would echo a number of things Ather said, but for us, it's all about putting the customer in the center of everything that we do. And customer expectations now, they're not expecting their bank to act like other banks. Their expectations are set by Google and Apple and Amazon and Uber. And so living up to those expectations, taking, for Citi, a 200-plus-year-old business, and modernizing that in a way that we're putting banking in the palm of people's hands is really important. As I think about straight-through processing and the digital infrastructure that supports our mobile app, that's critical. But I think the other thing is the level of engagement and adoption with people today. Citi just put out a mobile banking study where it shows that mobile banking customers interact 7 times a month with their bank. And millennials, it's 10 times a month. So the volume of their interactions, the knowledge that they get, the way that you have to serve up information to make it relevant, 40% of our mobile users are millennials. And so serving those customers in new and different ways and meeting their expectations is really critical. Understanding technology and providing those things in the device where, when, and how they want it is the other kind of factor. How we power that with an infrastructure and baseline, I think, is our responsibility to figure out, but the end game is what does the consumer need and how do we provide that quickly?
So Max, the same question for you at JP Morgan.
Similar observations, given that we have similar institutions. Having said that, I would highlight 2 points. One is, I fully agree, technology and technological innovation is not new, but I think the pace has changed. And the need to react quickly to what is happening in the market, deploy new technologies and ideas quickly, that has really accelerated. And that has also changed the way we work, for example, at JP Morgan, where it is adoption of the cloud, it is a blurring of the lines between who is front office and who is technology, much more into a joint working team to, in a very quick way, deploy solutions. So that is one. And then I think Alice's point is spot on about changing customer expectations. What I find very interesting that the experience people have, especially with their iPhones and mobile devices, is not only shaping how they do their own financial services in the consumer side, but it's also reshaping how they think on the wholesale side about interacting with their banks.
So Tim, what do you see as you look across your clients in terms of what's new about this moment in time?
Yeah, and I would echo a lot of the comments that have already been made. We come from a sort of specific situation where we're a fintech service provider, providing enterprise solutions largely for incumbents, although Wealth Fund and Betterment, we talked about them earlier this morning, are also leveraging our technology. I think there are 2 things, and just they're additive to the conversation so far, that we're seeing. One is it is all about the client, but in these large, complex institutions, that has to extend all the way back to get front to back STP, and there's lots of legacy platforms that have built up over time, and the opportunity to use new technology to simplify and improve and integrate those platforms is a big opportunity. And related to that is also a willingness and recognition that shared technology platforms, next generation platforms, can make a big difference. And you had Ather talked about deploying the cloud within an institution, but in many cases we're seeing that across institutions, which is allowing institutions to innovate faster and create more value, particularly where you can create network value and get a benefit that goes beyond cost, but is creating additional functionality.
So, Ather, talk to us a bit about this legacy systems issue, because my perception is that probably there's a bunch of original IBM mainframes still powering many of the banks out there and so forth. And there's the programming language may not be terribly modern either. So, how big a problem is that, and what do you do about it? How does the new technology today, can you just sort of quickly junk a lot of this legacy stuff, or is it still going to be with us in 100 years' time?
So you have a couple problems there. So one is that the technology is old. We have technology systems in the bank that are older than I am. And the problem is that they work, and they work very well. They work at scale. And so for my business, for example, we move $1.4 trillion a day around the world. And so thinking about how do you move from that platform, which is tried, true, stable, tested by the Federal Reserve, trusted by our clients, integrated with our clients, to let's flip it all to blockchain, is a big leap. And so you sort of have to sort of migrate things along. So it's a real thing. You also have, given we're in a financial institution, we're regulated in myriad markets around the world, you have the challenge of what has to happen in a particular market. So there are many markets in Asia, Europe, and Latin America in particular where everything is required by law to be onshore. And so you can't deploy a cloud. You have to have a full stack of infrastructure, be it a data center, your hardware, your client data, particularly these days. And we've seen Google and others run into this problem, client data onshore. So thinking about how you move that forward when clients themselves don't have the technology to reintegrate with something new is a challenge. I think the big opportunities we hear from clients is around APIs. So finding an easy, clean way to access the parts of the systems they need. And so to Tim's comments, I think thinking about how you can insulate them from the old iron in the back and create a middle layer between them that they can integrate into and get the information they need without having to worry about the back end is really an opportunity.
But you really do imagine that some of that technology that's already there, that's older than you, will continue to be there for the foreseeable future, but just with a different overlay on it. Is that?
At a certain level, if it's not broken, don't fix it. Because I think do you really care how your dollars move? No, but you care about whether they get where they are when they need to be there and what information travels with them. So I think insulating the old architecture with new is probably a bigger priority than fixing the cold hard iron.
And you don't feel there's going to be a competitive disadvantage against companies that are able to start from scratch?
Well, I think that at least in our space, when I think about money movement, I haven't met a fintech yet, and I meet with a lot of them. We're partnered with many who want to be a regulated financial institution in the United States or anywhere else. Right? They want to be valued like tech companies. They don't want to be valued like banks. And they don't want the regulatory responsibilities that we have. So I think that there's a middle ground where you can actually find partnerships. And we've done deals with companies like Earthport out of the UK to deliver low-value payments into 100 markets around the world. We've done deals with companies like Moto Payments to do translation between infrastructures. And so I think there's lots of things you can do with the fintech to have them add value to your model without having to wholly cannibalize or think of it as zero-sum.
Tim, do you want to jump in on this?
Well, I just echo a couple things that Aether said. There is a tremendous opportunity to leverage new technology to pull things together, both on the front end and also the back end with an integrated data layer. And so we play in capital markets quite a bit. And you think about the way that business grew up, it was by asset class, by region, separate infrastructure, which creates a real mess for large institutions. And institutions are increasingly wanting to look at global, multi-asset class, integrated platform. We're working with institutions to create that, and that gives them not just cost, but it gives them an integrated view of their global position in real time, and much higher functionality. And so it's the surround, it's the data layer in the back end, and then over time the systems in the middle definitely go away and have a modernization program against that.
Well, Alice, what's the biggest challenge that you face in terms of legacy systems?
Just to be additive, because I think a lot of what both Aether and Tim said are exactly what we face within Citi as well. Decoupling back end from front end, building the right APIs and microservices to separate out key experiences and key capabilities from being hard-coded or connected directly to legacy systems. But I think with the other piece for us that's important is understanding the space that we want to play in. So as you start to do this decoupling, as you create the microservices and the APIs, what are the places that you believe are intellectual properties that you want to own, build and keep, and build in-house? And where are the things that, in order to accelerate, to drive change, or where innovation is going to happen, that you want to purchase? And then setting up your platforms in a way where you can quickly leverage the things you do well, the things you want to keep, and you can quickly hook up to partners, third parties, and other platforms who are going to really accelerate in the space that you need to. And bringing that all together in a way that brings something to the customer that's relevant is an interesting balance and requires a lot of experimentation, learn fast, change course as you do that.
So I can remember a couple of years ago at our first FinTech Summit, we had Larry Summers on stage basically predicting that certainly anything that was pure intermediation would be basically wiped out over the next few years by FinTech and particularly blockchain technologies. And I mean, do you have a hypothesis about where the profits are going to be made, and therefore where technology has to be deployed differently? If you're a mainstream player, I mean, Alice, as you're reconceiving the business?
Yeah, I mean, I think right now, do I personally have a hypothesis? I would say probably no. I'm in a place of experimentation. I think there are a lot of places you can play, a lot of different business models, and we've talked about a number of them, whether that be as something as simple as the wallet space and payments and where that's going, or things that are much more complex around blockchain. But I feel like I'm in a space personally where it's about learning. It's about understanding what others are doing, what we're doing, experimenting, seeing what's working, and then thinking about that and rolling out in a broader scale way.
Max, similar?
I actually think it is less about fintech versus the established players. I think that's also the point that Aether made. It's still about better, faster, cheaper for clients and really, improving the services they get. And I really think that banks, established banks, have things they bring to the table, such as experience with regulation, experience with large-scale operations, trust of customers. And fintechs also have great things they bring to the table, fresh ideas, a new look, challenges, and it's really about bringing the two together to find solutions that make things better, faster, cheaper.
I mean, so I suppose I've been struck watching some of those GE adverts over the past year about how they're trying to get software engineers to work at General Electric rather than in Silicon Valley for some whizzy startup. And I mean, I guess fintech companies in Silicon Valley presumably find it easier to recruit talent than a stodgy old bank. How big a problem is the talent challenge as you try and
interestingly
adopt this
enough,
technology?
Finding the right talent is definitely a challenge everywhere, but it is not as bad as you would think. So for example, in Chase, we have 50 million households in the US as clients, and for a software engineer to work on an app that goes to 50 million households is a really exciting thing. And it's not only about pool tables and nice breakfast, but it's also about great tasks and real impact that is attracting people. And so we actually find it challenging but reasonable to find people.
I just want to add one thing about what is the incumbent institutions versus the startups. So we had the analogy earlier of Uber and its GPS plus it's a mobile app plus it's something else plus it's something else when you put all that together. And it is, when you think about whether it's a Citi or a Bank of America or a JP Morgan, it's a complex institution that has lending, but it has deposit taking, it has payments, and it's the way all those things come together that create value. And it's very hard for an incumbent to attack all that, or excuse me, a startup to attack all that at the same time. So I think it's much more likely you're going to have the partnership model of creating new widgets that fit into this complex ecosystem.
Ather, I mean, how easy do you find it to hire software engineers and tempt them away from the Silicon Valley opportunities?
Yeah, it depends on where you are around the world. So I think, candidly, if you're in Asia and you're in Singapore, where the government is very pro-bank and wants the banks to be key to this, the kind of the solution for the southeast region of Asia, it's actually relatively easy, right? Because it's an environment where innovation is really done. Here in the States, where you're dealing with, we still process checks and people don't want to work on check systems, it's a little more challenging, but we're doing a lot of things differently. So we've actually flipped most of our workspace in our Bryant Park headquarters. We're gradually working through it and going to flexible workspace, more like a WeWork space like you'd find in Silicon Valley, to create that collaboration. To my fellow panelists' points around getting the business and the engineers together. So I think when you get the power you get is you have people who've got the massive client networks that we have as a bank. You've got business people who understand the core needs of the client, and you can bring the engineers to it. They can solve much more interesting, complex problems on a global scale. So you can make that pitch. It's not always easy, but you can sort of start to work through it. And as they see we actually start doing things that are more innovative, it kind of creates a snowball effect.
Alice, is Citigroup WeWorking itself now?
It's interesting because I would agree with what everyone said. The thing I would add is when we've talked to whether it's software developers, designers, there are people who clearly always want to be sort of on the cutting edge of things and developing on the cutting edge. But there are a good portion of engineers and software developers that really get excited about solving problems. And so if you start to talk about banking in the way where you're taking, an industry that's been around for a long time, in Citi's case, 200 plus years, and you have the opportunity as an engineer to change that space, to solve the problems for a company, to turn around and transform things into something new and different, that's very exciting for a number of the engineers and developers. And so I think some of it is around pitching it in the right way and starting to change the story on, hey, do you want to work for this big old bank? Or, hey, do you really want to turn around a company and change things and do new and different things with the scale, with the dollars, with the customer base that we have? As well as the customer perception of some of the big banks, although there's positives and negatives, they feel secure. And security these days is really important, having control over your finances. And so having the combination of customer feeling of security with a bank, as well as turning that around and transforming the infrastructure in new and different ways with the funds and investment that a large company has, is appealing to a lot of the engineers and developers.
Yeah, I think to Alice's point, when I think about it, I think I saw a stat yesterday that in the last 12 months, something like $13 billion went into fintechs in general in terms of venture capital funding. I bet you if you added up the technology spend of the four of our companies, we'd dwarf that. And so the opportunity and resources to make difference, I think, are still in some of the incumbent institutions.
Yeah.
And Tim, we were talking before at lunch about one of your goals is to take paper out of the system. And Ather just mentioned checking, which I still find amazing that, compared to Britain, I can't remember the last time I wrote a check in Britain, but here it's still almost a normal part of life. I mean, now you write the check and photograph it with your phone and email it off to someone else who presumably writes it out the other end. But is that going to go? Or what's the opportunity around taking paper out of the system?
Well, and it's a great, when we talk about disruption, and let's disrupt paper, right? So the financial services industry still spends almost $20 billion a year sending paper statements and transactional communications to clients. And
$20 billion a year.
and let's face it, there's been progress with e-delivery, but today's e-delivery experience is terrible consumer experience, and that is inhibiting the next level of adoption.
Why is it a terrible consumer experience?
You get a link, you have to click on the link, it takes you to a website, you have to remember your password, and you do that across multiple things that it doesn't make sense. So the next level
So you need a kind of public key or something.
Exactly. The next level of digital document, we believe, is that the digital document you receive has to be much better than the paper document that you would have gotten. It has to have better content. It has to be much more tailored. New channels, so instead of getting it through e-delivery, get it to the places that you go every day, whether that's your cloud suite, maybe your online banking channel, maybe another channel. And it has to leverage network effect so that you're getting value not just from yourself, but from the others that are using all of that. And when you do all those things together, there's a huge opportunity to really improve the client experience on all of these operational and regulatory communications that people need to get, but we can save a lot of money that we can invest in the other experiences.
Any of you guys want to comment on whether paper is going to disappear quickly or not?
The only thing I would add to what Tim said is really understanding what motivates the consumer to keep paper. And in the case of statements, when we've done a lot of research on this, what comes up is that people have a system or a habit, right, that they do with a paper statement, whether it's they're checking things off, whether they've consolidated all of their bills onto one credit card or in one bank account, and they want that paper statement as their reminder. You have to understand almost customer by customer, what are those things? Is it the reminder that is preventing them from going paperless? Is it the habit or the system that they have? And when you take those things and you solve those problems, whether it's through, we'll send you a push notification when your statement is ready. We will create smart statements that enable you to check off the box, to separate spend, to tag things that you have. As we build the things that solve the problem that keeps them on paper, I think that's when we'll start to see a bigger shift after you take the low-hanging fruit, which is people who are environmentally friendly and people who don't want to collect paper out of the system.
Yeah, what I'd add is that only in the United States, at least the only two ubiquitous payment methods are cash and checks. Right? Cards have their limitations. ACH and wire have the limitations, particularly for the unbanked. So you still have people who gravitate to those things, both out of habit, to Alice's point, but also because they're ubiquitous. So I think the difference now is that the institutions, like the three of us here, are collaborating around common solutions to drive ubiquity. So things like person-to-person payments using mobile wallets, so the Zelle app that we kind of the launch with the clearinghouse, and those sort of things will, I think, help attack that. And then as you work inside that experience, Alice's point, you can sort of either mirror or change that underlying habit that introduces the paper being created in the first place, and then I think you can kind of kill it on site.
We had this prediction before lunch. If you were in the panel discussion there, about the fact that we're going to soon be able to log in using a blockchain-based identity. Is that something any of you in the banks are working on?
Blockchain is definitely an important priority, and we made it already
Bitcoin,
almost half an hour through the panel without mentioning the blockchain.
It's worse than tulips.
I'm not sure. I'm not sure if the login is the biggest priority. For example, for us, we focus on the blockchain a lot in the payment space. Also thinking through how, especially, complex payments, international payments can be much simplified, both for the customers as well as internally. If we have a client just sending money from Japan to London, somebody takes it out of an account in Japan, somebody pays it out in London, and then there's a lot of reconciliation in between the two, and that is, for example, a real opportunity that can be much simplified.
Thank you for the panel. It's fascinating. My name's Susan Feidelberg. I'm with Morgan Stanley. And yesterday I went for a run, and all I had on me was cash. And I stopped for an ice cream cone on the way back at Momofuku, which of course maybe that doesn't make sense, but but it was been a long day, and they did not accept cash. They said we won't. So my question for you is and someone else walked in and said you don't accept cash, but is this something that you see is coming down the line where we'll just stop accepting cash?
So I'll take a first crack at answering that. So it's going to take a long time because people, merchants at the end of the day, they want to get paid. I think the challenge you have with small merchants is that, cash is expensive and it's becoming more and more expensive to handle because not only of the regulatory burden around tracking it, but also this expense of handling it. So, one of the things in running transaction services for Bank of America, I run all of our cash vaults. And so whether you're a Starbucks or you're a small ice cream vendor and you have cash and you need to deposit it, you either have to walk into one of our financial centers, which is a transaction which is multiple times more expensive than anything we can do digitally, or you have to deposit in an ATM, or if you're a larger merchant like a Starbucks or something, you're going to drop it into a cash vault, right? All of which is expensive to handle. So the prices and all that stuff is going up for handling. So we're trying to encourage merchants by giving them other solutions. You just don't want to jack their prices and tell them you don't have another solution. So whether it's a mobile card reader or it's being able to take a QR code at the point of sale, whatever it may be, to push out of that. And so between the merchant side of it and then working with consumers with better technology in their hands, I think you can get a better pairing. You'll gradually see it work out. But there are countries around the world, if you go out into the Nordics or in India or places that are totally pushing away cash. I mean, it's kind of embarrassing that here in the States, our mobile adoption from in terms of payment standpoint falls behind parts of Africa, where M-Pays and other things are far ahead, and you just have to get more coordinated. So I think the collaboration point amongst the banks and the central infrastructure is critical to make it happen faster.
Mm-hmm.
How about a city?
I'm trying to think of what would be additive to that. I think it comes down to some extent, consumer demand as well. So for the most part, it's interesting when we do focus groups and research with customers, especially in North America, more and more you hear customers who actually don't carry any cash. They use, either their card, they use a digital wallet, they use their watch, whatever the payment methodology is. So I do see over time it will evolve to that place. I think it is going to take a while. As a global bank, though, there's other countries, for example, Mexico, it's a very cash-based society. Mm-hmm. And so I think things will be different depending on where you are in the globe. But more and more we hear customers saying that they're not using cash.
One point to add maybe, there is one important thing we need to get right, and that is security around mobile digital payments, because cash in the hand still has some element of, I know what I have. With cyber crimes and all the challenges that come with it, we as banks really must make sure that people feel comfortable if all their assets are somewhere in the digital space.
And how shaken were you by the Equifax hack? Did it surprise you?
It didn't surprise me. I think it was just not that specific incidents, but that something would happen. But that will be the challenge also for the years to come. We spend every year about $650 million on cyber protection. And they will always try, the criminals, to find a weak link there. And it's
do
very
you feel
hard.
Do you feel under daily attack at the bank?
Not feel, we are under daily attack.
And the same for the rest of you?
Absolutely.
And we have a question over here.
Sure. Hi, Noor Minai. I work at a bank. And I actually worked at all three of the banks.
We
And now
probably
currently-
did too.
How do you feel about the legacy system?
You didn't have to build them, did you?
So I'll refer you to my public key. So since the topic is re-architecting financial services, one of the things that has been sort of running through the conversation is banks feel under siege because our best customers are being stolen by these new innovative firms, fintech firms. And so my question I know what my feeling is, but I wanted to see what the larger banks are thinking about. Are these really your best customers? The fact that these customers are being served is good, it's a general good, and it's more a conversation around financial inclusion. Then how worried are we that these customers are the ones that we could profitably or in a safe manner serve? The folks that are looking for what we would call subprime credit is something we make a conscious decision not to serve today. The credit scoring that we use has been developed over a long time to have high information value. We heard this morning that sometimes the new firms will use the same credit scoring model, but then look at data to sort of deepen the credit relationship. So I could go on. I'll stop there and let you guys respond.
So sorting your customers is the question. Alice, do you want to go first?
What I would say is I don't necessarily view it as our customers being assaulted or taken from us. I think disruption is a good thing, right? It's just disruption in many industries made those industries much better. And so if you're not feeling uncomfortable, you're probably not growing in any way. And so as a bank, I think it's important for us to feel uncomfortable at this time. But we're doing so many things to engage our customers, to help our customers, whether that is helping them, through FICO score information, helping them understand how a FICO score is calculated, how they can improve that, leveraging our mobile features and functions to help move them through that experience. Whether it is thinking about the design of our products and solutions to add value. So there were times in the past where as banks we would always be talking about value capture. And today that's changed, right? It's about a value exchange. We're exchanging value with our customers. We're giving them something they couldn't get themselves. And in exchange for that, they're choosing to do business with us. And I think if fundamentally you stick to those principles, and as you think about your products, your services, your pricing, how you interact with customers, the education you provide them, what we've actually seen is that customers respect the big banks. They feel secure with big banks. They've taken more products and services with us than they have in the past. And so for me, it feels like a really good time. It's a challenging time. It's an exciting time. But I'm seeing a lot of promise with customers. And as I said...
Well, can I push you? Can I go a little bit Elizabeth Warren on you? Because, her point about financial services was there was a lot of selling product that customers didn't need, that was taking advantage of their ignorance, that was sort of long conditions that no one really understood.
Yeah.
The credit card, for example, the ideal customer is someone that forgets to pay every month but does pay eventually, and so you make a lot of money.
So I would
Are we
say-
seeing a real change in technology that's actually making you really
100%.
value exchange?
So what I would say is my team, for example, I'm in the credit card business. One of the things we're doing right now is we have a whole work stream on missed payments. What capabilities can we develop for customers to give them notification that their payment's coming due? We are doing that within a few days of that payment, making sure they understand it, making sure we're transparent. We revamped all of our servicing communications that tell you about whether or not your payment is late, your card's been lost or stolen, you've made a payment, whatever, and we've made all the language very transparent. We have customer panels that we take it through. We've worked through even our terms and conditions and our card member agreements to get it down to English versus bank terminology. We've worked with our legal partners to try because there's a lot of legal in there on what we have to disclose, how to update that language. So I think technology has helped us do that, whether it's through notifications, whether it's through transparent and simple language, whether it's through text where you can't do 60,000 characters worth of information, you can only do it in 120. There's a lot of different things that we've done to focus on that.
So, Aether, I'm going to stop being Elizabeth Warren now so you can talk to me.
Thank you.
So its time is almost up. So I just want to ask each of you in your closing remark, what do you think is going to be the most significant re-architecting of financial services that we're going to notice as consumers over the next, say, 2 years?
So I'll look at it through the lens through which I kind of manage. So I work in the global banking business, right? So I'm thinking about companies, either your large multinationals all the way down to your small businesses here in the United States. And for us, I think that the key is now it's moving from transactions to data to information. And so I think when we think about, charging or making money or earning revenue or fees or off of moving money here or there or providing a service, the services are now being asked for, we're having our clients ask us for insights. How can I make my business better? How can I grow it faster? Who in your network of clients can I work with to partner? So if you bank GE, can you find someone down in the supply chain you also bank and connect the two? So creating that network value is a key opportunity for us we haven't explored before. So I think moving from simplifying infrastructure to helping them manage risk to the cybersecurity point or provide insights is kind of where we're going to go.
Alice?
For me, I think it's around, because the space that I play in, as I said, is mobile in both servicing and acquisition. And one of the things I think that's going to be an important development in just getting to that ease of use for customers is around predictive servicing. So leveraging data and information to understand what people are doing, predicting that so that you can serve them up with that type of experience when they interact with your firm or brand. Whether that's, we know every, one of those 7 visits a month is to pay your bill. We serve that up to you the first time you do that, but then the next time you come, it might be about city price rewind or a feature or benefit of your card that you could take advantage of. So I think for me, being predictive, using data and information to make people's experience easy and give them empowerment and control over their finances.
Max?
I'm focused more on our wholesale businesses as well, and I think, same themes, data being much more important and a real asset, same as before it was maybe processing payments and providing credit. I really think straight through processing, we have seen a lot of changes already in the consumer space, especially in payments. You mentioned the checks earlier. I think the wholesale side is about to see the same level of innovation and changes and really changing the day-to-day process from bond issuance to trading that we've seen on the consumer.
The last word to you, Tim.
Yes, just to be additive to everything, we've talked a lot about banking, but one thing that is a clear trend that is out there is the commoditization of asset management. And that is really changing the whole industry of wealth management. It's changing the industry of asset management. It's changing the role of financial advisors. And as far as sort of the consumer experiences, that's already upon us and might make the biggest difference to folks in this room in the very near term, because that's well underway.